Well, good morning. I'm going to do my best to give you some objective analysis here regarding some things that have come up in the last couple of days, and I don't have time to write out what I'm going to be talking about, so you can check out the transcript to this video. Substack does a pretty good job with their transcripts. So there are a couple of topics that I wanted to mention. First I want to talk about what happened over the weekend in regards to the tariff threat that was made by the Trump administration on Colombia. That threat, in a lot of ways you can say it served the intent of the administration, and they got Colombia to do what they wanted them to do, which was to accept the return of criminal illegal immigrants from the United States that had come from Colombia. Initially, the Colombians had said no to the return. That's when Trump made the announcement on social media, which obviously had been communicated directly to him by more official channels, and subsequently they relented. I think that the real key here is that we had a chance to see how the administration is going to use tariffs. Clearly, they want to use it as a forceful diplomatic tool. This is kind of consistent with the tone that they have established for themselves with this incoming administration, which can be objectively seen as being very aggressive and open to disruption. And there's another example that I'll follow this up with that reinforces that. They certainly believe that they want to change the tone of how Washington is operating and perceived very quickly. They believe that they have the political mandate domestically to do that. And to a large extent, what I will say is, compared to the last time President Trump was in office back in the start of 2017, they do not have as many impediments as they did 8 years ago. Some of this is because they've been through this before and they've learned from their mistakes. And number two, they are coming into Washington with a little bit more public support, or the perception of public support for what they're doing. And certainly I can respect and appreciate how individuals may look at this not in a supportive manner. I think it simply is a fact that the opposition is not necessarily being listened to at this point. I think a lot of people are like, let them get in and actually do something, and then you can judge it. But I realize in today's world, that's never going to be the case for anyone. So now let's talk about something that has come up also, and actually I experienced this in my job yesterday, in that the federal agencies, now that they are all aligning with what they're being asked to do from the White House, they have gone ahead and paused all federal grant programs. The first one that we had seen back when the executive orders were issued by President Trump last Monday, just immediately after his inauguration, was the suspension of foreign aid. And obviously there were a lot of concerns about that in terms of how this could potentially affect various situations around the world. This suspension, or pause, you could say, has now been extended throughout the federal government. And of course, that also, what's happening is that the administration's made it clear that all federal grant programs, to the best of their ability, unless statutorily required by the enabling legislation that created them, need to align with White House goals and objectives. The White House has established, I think, pretty clear goals. Those were easily telegraphed, or consistently telegraphed, through the course of their campaign. And they've made it clear that they want the federal government to operate alongside that. That's also been reflected in how they're evaluating political appointees, and perhaps how some of the ways that they may be changing the civilian federal service employees regulations, particularly when it comes to hiring new employees, I would imagine, once the freeze goes away. What this means, not only are programs being paused, federal grant programs being paused, but grant themselves are being renamed. I had this experience yesterday. We have an application that's actually due at the end of this week. We've been told you go ahead and submit the application. The deadline hasn't changed, but the notice of funding opportunity is also called a NOFO. It was changed. The name of the grant was changed, and also the evaluation criteria were changed. And I believe that the agency has done what it canned at this point to eliminate anything that is not statutorily required, i.e. hasn't been passed into law by Congress, that does not align with the president's agenda or the president's goals and objectives and his themes. And so certain elements of this grant in terms of its scoring criteria that were put in place by the prior administration, by the Biden administration, have been eliminated. So it really is, this is probably within the president's authority to demand and do so. And I think it also is a continuation of the fact that what we saw in the previous administration, the Biden administration, was a lot of executive action to craft federal policy to line up with the White House's political agenda at a time when they weren't getting a lot of action from Congress, period. So I think this is, in a lot of ways, to reverse what had been done by the prior agenda. And again, whether we like it or not, that was telegraphed. But the challenge will be for a lot of local governments, state governments, and other agencies, and even corporations, is going to be dealing with this pause and its potential to create challenges in moving forward with various activities, whether it's road construction, other infrastructure projects, as well as other major investments that are being done that are involving federal money. So there are certainly arguments for and against that, but it is going to create, again, some disruption. As I said before, that was expected. That's what I predicted was going to happen once the administration took on. Now, these other items are a little different and deal more with some other things that have come up that I do think deserve some attention. As we know, with respect to federal tax policy, obviously one of the goals of the White House, of the Trump administration, as well as the Republican majorities in both the House and Senate, is going to be to extend or make permanent the tax plan that they approved in 2017, which resulted in tax cuts, and particularly in the income tax and other ways, prior to tax cuts compared to pre-2017 levels. That is going to likely require a reconciliation bill, or a reconciliation in order to get through the Senate without a filibuster. And that means that there's going to have to be some horse trading or some balancing that goes on with the effect of these tax cuts going into the future, because of the 10-year estimate requirements that are established by the Congressional Budget Office. So the federal government, the Congress, and the president are again going to look at ways to offset what they want to do with respect to income taxes. And one item that has been talked about in the past, it's not anything new, but there is a potential stronger likelihood that it'll happen this time around, would be to eliminate the tax exemption on municipal bonds. So basically, state and local debt, which is currently, when it's applied for general obligation purposes, is tax exempt, would no longer be tax exempt. And I personally think it's not only because of the ability to balance out the tax revenue issue with respect to future legislation involving making the current tax rates permanent. I also believe there's another factor in that by making state and local debt not tax exempt, naturally what that's going to do is rise the interest rates on those bonds. Municipal bonds, because they're tax exempt, have lower interest rates than private market bonds. And generally speaking, they do pretty well. They've got pretty favorable interest rates, especially for the borrowers. And what could happen is that this is an intent to shift the market towards federal debt in order to create more appetite for federal debt to help get federal treasury rates down. Because obviously the federal government's sitting at over $30 trillion of debt at this point, and is going to continue to need to add to that. And those interest rates have skyrocketed, which means the debt service on those, remember, these bonds are not being paid off in net. It's going to continue to grow the amount of the federal budget that has to go to debt service. So one strategy could potentially be, how do we make federal debt more attractive? Well, make state and local debt less attractive. Some people would say, well, the impact's going to be marginal, it's not going to do it. I don't know. But that's just something I also wanted to throw out there. And speaking of investments, wanted to take a moment to talk about perhaps the biggest investment story over the weekend, which involves something that's not even on the market, and at least on the stock market. It's in the app market now, and that is the Chinese ChatGPT clone, or ChatGPT alternative known as DeepSeek. This got released over the weekend. It appeared in the Google and the Apple stores, and naturally, because this was an unanticipated addition to the market coming from China, it caused a lot of panic in the markets, particularly with respect to the massive investments that have been made in stocks tied to AI and AI-related technologies. And the reason I don't play the stock market, and I would certainly not be buying speculative shares right now, that's just my personal opinion, do not take investment advice from me, is because of circumstances like this. So much of the money that is in the market is invested tactically, which means you're trying to get a quick return, and as soon as the stock goes up a certain amount, appreciates a certain amount, you're selling it and you're turning around and buying another stock that looks like a buy to hold for just enough time to get enough return and sell again. And what that also means is that it's based on a lot of automatic calls with respect to sell. Once it gets to a certain price, sell it. That's already programmed in the computer. And it can create domino effects like what we saw even prior to trading on Monday, because all this stuff started happening over the weekend. So in general, these are the kind of things you have to be concerned about unless you're buying stocks that have more of a strategic value. I just think tactical investing, if you work with people and you know what you're doing, great, and I fully support you. And at the same time, it creates a lot of risk for all other investors. And also right now, when you look, speaking of bonds, and I talked about, there was an interesting chart I saw that showed that the premium for taking risk in the market right now compared to the annual returns that you can make on bonds isn't all that great. So at this point right now, you may see more investors kind of moving to bonds, because with the rise in bond yields that we've seen, that really doesn't make a lot of sense to be playing crazy in the market, unless in the stock market, unless you know what you're doing. So I just wanted to share those thoughts for this morning, and I hope everybody has a great day. Take care.